OPEX, OPEX, what is it? How do you pronounce it? And why do traders in the community act like it is the plague when it comes to individual trading weeks? In this video, I'd like to do a deep dive on what OPEX or options expiration is and how it affects me personally as a trader. First, there is no right or wrong way to pronounce it. I've heard OPEX, I've heard OPEX, and the reality is it's OPEX, short for Options Expiration Week. In the United States, on every third Friday, what occurs is that there are monthly options expirations across all major US stocks that offer options. Now, the reality is that OPEX is almost talked about like an old wives' tales. People have different reasons and rationales why it ultimately affects the market a certain way. But in reality, I don't know if that's correct or just some random person's opinion. For me personally, the way that I look at it is that yes, it is higher than normal volume and activity because we have more options expiring that week than in other weeks. So I just look at it as a period of increased activity in the market. Now, when you hear increased activity, naturally you would think increased volatility, which as traders we would welcome. Typically, when you have increased volatility, it means more trade opportunities, aka more profits. So if that's the case and that OPEX is higher activity, why is it also known as one of the choppiest weeks of all time? Why is the word choppy what most traders refer to when talking about OPEX if it's a higher than normal volatility week? In my opinion, on some level, it's almost like an excuse that traders will make. And I am guilty of this as well, where we'll take a bad trade and then ultimately blame it on OPEX action, justifying in some way, shape, or form the actions that we did on a chart that really wasn't worth our time in the first place. In my opinion, to claim that OPEX weeks are always choppy is an incorrect statement. The reality is, after trading for several years, I have seen a ton of good opportunities take place during an OPEX week, including some of my best trades of all time. That being said, I'm definitely not going to argue with you. I remember plenty of OPEX days where it was extremely choppy as well. But the reality is, I asked the question, was it OPEX's fault that the market was choppy that day? Or can we attribute it to the fact that we know the market ranges 70% of the time? And if we're looking at choppy action as range action in the market, it shouldn't be surprising to us that we are seeing multiple choppy days inside of one trading week. The math suggests that what should be happening. Yet for some reason, on the weeks that we have OPEX, traders will often blame the choppy action that they're seeing on OPEX itself. So if it's not OPEX's fault that the market is chopping when it does have those certain range days, what is it about OPEX that makes it just feel a little bit off that week? Why does the market feel like it acts a little bit different on these weeks versus others? In my opinion, using the word choppy to describe all OPEX action is not accurate. However, the term that comes to mind for me is trappy. Now, there is clean action. There is clean trends. Again, some of the best days I've ever seen have been during OPEX weeks where they offer an extremely clean trend to trade. But the reality is that throughout these clean trends, what I have noticed occurs more during OPEX weeks than other weeks in the market is traps. When I say trap, I mean failed breakouts, failed higher highs, things needing more retracement than usual. It just doesn't feel like the action is as clean and trending as you would want it to be. Again, the reality is this happens most weeks anyways. The market is in a range 70% of the time, but particularly during OPEX weeks, it feels like individual names will need to trap certain sides of a trade before ultimately making the move that they need to make. Ultimately, though, what do I mean by traps? Let's dive into the charts and let me show you exactly what I'm referencing. Starting this Monday, and I'll put a timeline here, everything to the right of this red line occurred during an OPEX week. So here what we can see is that on this individual given day, that doesn't look very choppy to me. This looks like a relatively straightforward and clean downtrend that offered several opportunities. Whether you look to take shorts on this 1, 2, 3, whether you look to take shorts on this lower high, or whether you look to take shorts on this continuation, there was valid entries on the 15-minute time frame throughout the course of this day, right? So in my opinion, this was a good example of how something was not choppy during an OPEX week. Now, particularly as an individual trader, I did not capture the moves I wanted on this day. I was a little bit too much of a stickler. I was very, very specific in what I wanted, and I refused to take a short entry until we had broken over the pre-market highs, which ultimately never ended up happening. Again, it's almost like on some level, I was expecting that OPEX trap to occur. And when it didn't, I was annoyed and ultimately ended up missing this first move down. I, however, did take a short entry during this move and ultimately was able to capture a nice trade on what was a rather clean trending day. Did I get as much as I wanted? No, but it was a solid trade overall. And this is a good example of how OPEX days are definitely not all choppy. This was a very straightforward downtrending day and didn't really offer much chop whatsoever. Now, after this Monday occurs, we see that the market had a huge move, right? From top to bottom, the index is moving over 2% on the SPY. That is a giant move for the S&P 500 index. 2% in a day is almost unheard of, right? And that's the move that occurred in one day on a downtrend on Monday morning, right? So coming into Tuesday, I think that a lot of traders out there had a massive amount of FOMO about missing Monday's move down. So Tuesday, everybody assumed the market would continue going down. Now, most of you out there, if you've had some previous trading experience for long enough, you had the wherewithal and the education to know that after a large move like that, is it possible we continue straight down? Yes. But is it also possible that the market takes a day or two to range and go sideways before moving anywhere? Yes. Absolutely. And that's ultimately what it ended up happening. If we take a look at a daily chart of the S&P 500 here, we have a large downtrending day followed by essentially a pause bar, right? It goes sideways and doesn't really do anything except range. And again, for traders who are not able to put aside their FOMO from missing this move down over here, then yes, you could have blamed this bad action on OPEX, when in reality, on any week, we would be looking for some sort of range day to follow up the giant down move that this chart had the day before. It makes 100% sense to look for a range day following a huge trend day like that. It's expected. It's what we were looking for, right? So when you see a day like this where every single new low of day fails, and we get bought back up, and every single new high of day fails, and we sell right back down. That's the classic definition of a range day, and you should not have these crazy expectations that we are going to get a breakout following up the large trend day on Monday. It wasn't a reasonable expectation to expect a large continuation that next day. So again, the question I have to ask here is this choppy or range day OPEX's fault? Is OPEX to blame for this happening, or was it simply the fact that the market had a giant trending day the day before, right? So in my opinion, so far, Monday and Tuesday, nothing that tricky about OPEX has really even occurred. What has really taken place is a large downtrending day and then a range day to follow it up with a period of consolidation. Now, for me, where OPEX got tricky came on Wednesday, right? The market itself actually set a relatively significant gap up. It had gapped up over $2.50, $3 from the previous day's close, which does signal some strength, right? So it was valid to be paying attention for longs in this area, right? At least to have taken out the pre-market high here, right? And when longs in that never took out the pre-market high, which means a failure pattern just has a less high probability of succeeding, right? This gap up failed in a massive way and got slammed and ultimately created a pretty clean and tame downtrend, right? So for me, the trappiness of OPEX week, this particular week, comes from this day. This is the trap, right? Where we have a relatively clean bear flag type of action, a large move down, a period of consolidation. Expecting more follow through to the downside on Wednesday was not surprising whatsoever. What was surprising about it and what ultimately made it choppy, in my opinion, was the fact that we gapped up and showed strength prior to that ultimate failure happening where we do take out all of these lows. So for me, it just felt a little bit out of place that we gapped up that day. And that to me was the trap that had come as a result of OPEX week. Now, do I know for a fact that OPEX had anything to do with us moving up that day? No, absolutely not. But it just tends to feel like after trading these OPEX weeks for years, stuff like this tends to happen. It tends to trick you a little bit pre-market in one direction and ultimately fail the gaps that it makes, right? And today is almost no different, right? Today we opened up relatively weak without gapping, without showing any real strength from the overnight session. Moving lower made much more sense today than moving higher. Yet seemingly out of nowhere, despite an early morning push down, the market decided not only to rally back to the opening print, which would make sense, rally back to the opening print, set a lower high, continue down. That makes sense. But a large move from 499s to 504s almost had a lot of traders out there feeling like, hey, the bottom might be in right now. This might be the low for the week. When in reality, all we were doing, in my humble opinion, was coming up to set a 15-minute lower high, right? The 15-minute trend had never changed if you look from yesterday's action to today. And all the market did, this entire rally, was come up to set a 15-minute lower high. But that was an extremely aggressive rally. It was very trappy, and it certainly caught a lot of traders off guard. I know a few traders in particular who ended up taking big losses today because they tried to go long after this strength up here. After this initial push is where they tried to go long. And in my opinion, that is something that feels like an OPEX trap. It felt like this rally before a downtrend is something that OPEX was responsible for. Now, was that actually the case? Do we have any tangible evidence that OPEX causes moves like this or pre-market gaps that fail? No, in my opinion, there isn't anything tangible out there to back up these claims of choppiness, or what most people do is call it choppy. But in my opinion, it comes with a personal experience of you having traded these types of days or weeks for several years on end. Ultimately, here is what I would recommend if you are going to trade during an OPEX week. One, don't hesitate to just take the week off if you have a gut feeling or something is telling you that you shouldn't be trading that week. Whether it's OPEX week or any week in general, if you don't feel good about it, don't trade. However, in my opinion, the most straightforward approach is to treat it like any other week out there with one minor caveat. In my opinion, on OPEX weeks, on days where you see potential reason for chop, on an OPEX week in particular, I would be a little bit more eager to close positions well before they hit targets. And that's one thing that I wish I did better on Tuesday. On Tuesday, I had 3 winning entries where I had a very solid entry, and at one point in time was up 3 or 4R on those particular trades and let them come back down to break even as I was aiming for a breakout despite knowing that I should be looking for a range day. Now that applies to any range day and not just on OPEX, but knowing that an OPEX weeks has the tendency to be a little bit trickier, I would just be a little bit more conservative with your price targets and not always expect the massive moves that you can on a regular trading week. Now, for me personally, OPEX as the year goes on has had a less and less impact on my mentals as I've learned to realize it really is just another trading week where you just have to keep your eye out on a couple of things in particular.